Welcome back, colleagues, to the second segment of the question. So we're just finishing the net asset list calculation. Okay, so which takes us to the third working. The third working will be Remember, we're doing that so that we can find it easy to calculate goodwill, right? So we shall calculate goodwill in the third working. Now, goodwill basically is the difference between your consideration, the money that you actually buy the asset at, or the company at, less the value of that company, which is the net assets. So the assets of the company, when you remove the assets of the company from the money you actually bought, the value of the assets from the money you bought the company with, the difference will be the goodwill. Okay, having to define that, basically then you know that we are supposed to say consideration minus net asset, right? Yeah. So remember now, this consideration that we are putting, consideration, is a consideration of the parent company, right? That is just a consideration of the parent company. And the parent company invested 1,450,000. Okay, so we're also going to do that. Okay, so we have 1,450. Okay, so we are saying that this is just a consideration of the parent, but this is not an entirety of the business. Remember, when we were looking at our group structure, we were saying that group structure, where is group structure? We were saying that the parent company has only bought 72.5%, right? Meaning there is another 27.5% we haven't considered. Okay, perfect. So if that's the case, so we are supposed to add that 27% of the non-controlling interest to have the total consideration, how much we would buy the company at if like we bought both sides. Now remember that in the notes, we were told that it's company's policy to value the non-controlling interest at the appropriate share of the fair value of the subsidiary's net assets. So we are going to go to the net assets we calculated. And remember, we are doing this at acquisition, because that's when you determine goodwill, right? Especially if you are from buying. So this is our acquisition side, and that was our net asset at acquisition. So what is 27.5% of 1,400 is what will be our non-controlling interest is equal to 27.5 of 1. Okay, and what's that? That's 385. Okay, so let's proceed. Now, this is a total consideration of the company. And remember, we are supposed to less the net assets. How much worth, how worthy is the company? Okay, let's less net assets, right? So what was the value of our net assets at acquisition? It was 1,400. Remember, it is this value here, 1,400. That was the net asset value at acquisition. Okay, put that right. So we are adding this plus this minus that. And what will be our value? We're going to find 14550 plus 385 minus 1400. We're going to get 435. Okay, so this is our goodwill. All right, let's proceed. I'm sure it is clear about the goodwill. Working for. Okay, so working for, we are going to calculate NCI, non-controlling interest. Okay, NCI, right? Okay, so how do we calculate NCI? NCI we get, so we basically just get the NCI share at acquisition and the NCI share in the post-acquisition profits. So what is the value of NCI at acquisition and what is the value of NCI at post-acquisition or in the post-acquisition profits? What would be the share? So now that would be the total value of NCI. Now remember, when we were calculating the net assets, so in these net assets, where is the net assets? In this 414, there is a component of the parent company and there is also a component of the non-controlling interest. And the share of the non-controlling interest is 27%. So NCI share in acquisition. Okay, I wanted to write net assets, right? So we are saying that is 27.15% of 14. And remember we had calculated this, and what did we have there? We had the 385, right? 385. Okay, what about in the post-acquisition now? So after the business is running, remember we had the post-acquisition profit of 500. So also NCI share in post-acquisition profit. So here we are saying that our profit was, so you know the percentage is 27.5 of 500, right? We are all agreeing that the post-acquisition profit was 500. Yeah, okay. And what is 27.5% of 500? That would be 137.5, right? Totaling that will give us 522.5. Okay, so that is our non-controlling interest, right? We proceed. I'm sure that was also straightforward. So we just look at the pre-acquisition profit share and post-acquisition share. So working 5, right? What is our working 5? Group retained earnings. So basically we're just looking at the TUMA features that we are given, especially here now. So we need to work out this and that. Okay, so we said we can either start with general reserves or retained earnings, whichever. So if we are starting with retained earnings, so retained earnings, ne? So we have for retained earning, we have, since we are now like putting them together, so we're supposed to have for A and for B, right? Okay, so at reporting, what am I doing? Reporting. Okay. I needed to erase that. Let me erase that. Okay. At reporting, right? So we go to retained earnings at reporting. Retained earnings at reporting, it was 485. Okay, and 100 for the parent. For the subsidiary. Then at acquisition, you know that you always don't have this because you don't acquire the parent unless it was also acquired by another. And we were told that there are 0 retained earnings at acquisition, so it's also a blank. So we're going to have 485 and 100. Now this 100, we need the share of the parent. So parents or group's share in this, because this is a total for the company, so you need the share of the parent now. So which should be 72.5% of 100, which would be, what is 72.5 of 100? That's still 72, right? 0.5, 72.5. Then we add this together. What will we have? What do we have? That's a 557.5, right? Wonderful. Let's go to the next working. So since we said we started with retained earnings, so meaning our working, that would be working 6 now, right? Working 6 would be general reserves. Okay, general reserves at reporting. So at reporting is always as per question. So we go to the question and go to general reserves. We have for the parent, which is A, alpha, we have 1,200. And for the subsidiary, we have 800. At acquisition, we know that we didn't acquire A, but we were told we had 400. So remember, we are supposed to less it because it's already in the 800. So 4. Okay. That would be 1, 2. That would be 400. Okay. Then here we want to find the group's share or parent's share, whichever. And parents' share, we have 72.5% of the 400. And what's that? We have 290 there. Okay, 290. So what would be our total? Our total would be 1,490. All right, that's very good. That's very good. So basically, this is our working. These are our workings. So I don't think we need any more workings now. Because looking at the question, we didn't have enough, and this one we will only consider it in the second part B. Okay, so I hope you learned something. So the next video is going to cover the consolidated financial statement. These were just our workings. See you in the next video.